Hi guys, welcome to Traders Talk, and this is our anniversary edition. Okay, all right, and for those who have actually joined us, this is actually our 52nd show. 52nd show. That means we have actually had this Traders Talk for the past 52 weeks. For the past 52 weeks, and it's actually a great achievement for myself and also for you guys who have been supporting me. Yeah, and. Yes, so we have actually gone through a lot of contents, and perhaps maybe later we will just also be a bit nostalgic to actually go through for the past 1 year, for the past 52 weeks, basically what we have actually covered, and basically what we have actually achieved, and what kind of communication we actually wanted to actually disseminate to our listeners, our viewers here, and of course, the thing is, I hope that the show has actually made a little difference to your investment or trading journey, and of course, I hope that it has also helped you a bit to actually make things more easier. Yep. And for those who have not had the opportunity to join us, and of course, if today is your first day, uh, you can always go back to actually watch our show, yeah, and it's all on our webpage, on our Facebook page. You can always go through, yeah. And welcome for those who have actually joined, and of course, the thing for myself is for more people to actually come on our show, and also more people to actually join us lah. I mean, basically to see how we can actually grow together as a trader. And of course, I would not say that me myself would know everything. Of course, everybody is growing and everybody is actually learning. Because the thing for the past, I think for the past 6 months, it has been a very different kind of journey for a lot of traders, even for the experienced traders. The past 6 months has actually, the market for the past 6 months has actually been very different from what they have actually experienced in the past many years. Yep. And of course, again, like I said, this is an experience to actually go through. And even however difficult it is, if you have actually gone through a difficult phase, the thing is that never give up, never give up. Even if you're faced with difficulties, embrace the challenge. And of course, once you actually go through it, once you actually grow through it, you grow with it, yeah. And when you actually grow and learn from it, then you actually become better. Yeah, you become a better trader. And this is what I mean, myself and many of our fellow traders have also experienced. And of course, if this kind of things comes again in the future, we would actually be ready for it, and we would actually know how to actually tackle. Yeah. And of course, the thing is, when you go through a difficult phase, and then you actually go through a nicer or a greener phase, yeah, then that's where you actually make more money. Okay, that's where you actually make more money. You actually generate more wealth. Yeah, because if you learn from uh, um, the hard times, the learn from the hard times, a tough market, a very volatile market, then of course, when things are actually better, you become more experienced, right? You learn a lot of things. You learn how to manage your trade. You learn when to actually get in a trade, when not to get in a trade, and this is actually what builds you as a good trader, as a good trader. Yeah. And and of course, we hope that the market can actually improve in the next half of the year, and don't go through this what is that, this volatility, continue this kind of volatility, where it can be actually a bit uncertain for both investors or also traders. Of course, for traders, we try to adapt, we try to actually adapt the situation. But even as we adapt, the market can also be very brutal, can also be very brutal to us. Yeah. And of course, if you follow our show and all, we did mention for many months already, uh, cut short duration from trading for months or week. That means duration of trades which you actually go in is 45 days or 60 days, then cut short that to weeks, and then subsequently we say cut short that to days, and of course finally cut short that to even hours. Yeah, so this is the kind of market which we have to actually go through. Yeah, and it's a great experience, I would say. I mean, how many of you guys outside there would actually agree? And if you actually agree, maybe give me a love or something, yeah, so that I know that, that you guys are also with me, and it's also learning along the way. Yeah. Okay, good. Yesterday was actually I mean, today basically we are just going to actually go through um, um, chill out lah. I mean the market yesterday was actually closed. Yesterday was actually closed. I think only the futures was actually trading. And of course, if you look at the futures yesterday and also today, it is actually up there. Yeah? And after a very brutal 2 weeks where the S&P and the Nasdaq has actually gone down by about 10 to 11%, right? Of course, I would actually expect for this week to have actually some form of recovery. Yeah, some form of recovery because of the oversold positions, and also whatever major news that is actually coming out, like the last week's Fed rate hike, CPI, and all has already been announced for the past 2 weeks, and last Thursday was the uh, rate hike, which was 75 basis points. Yeah, of course, going forward, the interest rate is actually going to continue to go up until it's about 4% if not mistaken, by the end of the year. Currently, it is actually at 1.5%. Currently is 1.5%, based on 3 hikes. Yeah, based on 3 hikes, and this would continue until the inflation is actually brought to tame. They managed to actually tame the inflation, and because it's actually 8.6% right now, which is actually quite high, and I mean that will continue lah. I mean that will continue. Like I said, if you have actually learned how to trade during this time and to actually manage the way the market behaves, then of course we would actually be more ready, regardless whether every month they will actually go through a cycle of rate hikes. Yeah, rate hikes. Then we can actually use that experience which we actually learned for the past, I would say, 3 months since March. Right, the first rate hike was actually in March. Since the past 3 months, we will actually take that to actually learn how to actually trade the markets. Yeah, of course things can change, but at least we are more ready. Yeah. Let me I'll just go through a bit, I mean, on the markets and what basically we actually expect this week, and then I will also go through what we have actually covered for the past year. Of course, for those who had joined us in between, then of course you can also see the shows which we had, how we actually structured it, and basically where we actually move on since we started 1 year ago. Yeah. Okay. Oops. There is an echo somewhere. Let me check where the echo is coming. Okay, it's coming from my speaker. Okay, S&P last week we actually closed at 3674. Okay, and And basically for this week, I would actually expect some recovery for the S&P. There's actually no major. Is the screen so small? Let me check the screen again. I put in this. I should use this. Okay, maybe I use this. Okay, better. So last week basically we had actually gone all below all the previous lows, right? We have actually breached this level of about 3,800 level, and we have actually I mean we recovered a bit midweek, going back up to above 3,008, but subsequent to that, I mean the risk of the traders or the market was on, and because of the Thursday's rate hike announcement, right? Then basically the market sold off again on Thursday, and Friday it recovered a bit, but more or less no change as at Friday. Yeah. So this week basically we should be able to actually hold this level of 3,600, and we should be able to trade along up to this 3,008 level. So in between here. And of course, like today itself, you can see the futures itself is actually up about 30 over points right now. And of course, high chance for today to be a green day. Yeah. And of course, the 3.8 level is again one level for the market to actually breach back up. But even if it actually breaches, I do not expect that it will be actually a quick jump back up. Yeah, I mean it may go to this around this level to cover back the gaps. This is the first gap, right? To actually go back to 3,009 to cover the first gaps, and then we'll see actually how the price action is from there. Yeah. So again, the concept is still the same. Things this week is better because there's no major news. So the recovery rally might be stronger for this week. Yeah. Nasdaq is actually still the same, more or less, because for S&P and Nasdaq, for the past weeks, it has actually been trading quite aligned. Yeah, because both itself has gone down by the same percentages right here to here, gone down by about 11%. Let me see. Yeah, gone down by about 11% for the past 2 weeks, and of course last week it was up again, coming back above this previous support levels, coming back up, but again dip back down because of the Thursday's meeting, and on Friday it actually recovered a bit. Yeah. So again, same kind of patterns might emerge where a recovery will come mainly because of the oversold position, and then it would actually trade around this level of 11,600. Yeah, and of course we will need to actually see that there is actually going to be a strong bullish breach above this 11,600 level. Yep. So that is actually Nasdaq. And of course, all the other component stocks of S&P or even Nasdaq might follow suit this kind of pattern. Like for example, if you look at Microsoft, is also the same. Past 2 weeks it has gone down. Midweek last week went up, then came down. Friday it recovered a bit. And today you can also see that it is already pre-market coming up to about plus $4. Yeah, plus $4. Yeah, for Microsoft. And I think the one which we mentioned in our in our past show, right? Which was actually Google, right? Google. Yeah. Okay. Google. Yes. I would say we did mention this in our newsletter. If you have not read the newsletter, go and read the newsletter. We have actually talked a bit on Google, right? Google. mainly if the market is coming back up, right? I mean, basically, there would be a high chance of a run up back for Google, mainly because of the stock split, which will actually happen in 15 of July, I think. Yeah, 15 of July. Recheck the what is that, the dates again, tentative, I think, is actually at 15 of July. If anyone can confirm, maybe can just put on the chat. Yeah. And the one thing which I also want to highlight, which we also covered in our newsletter, right, is on the stock split. Post split, you actually get 20 shares. Yeah. So not 20 shares. Yeah, correct. For one share you hold, you actually get 20 shares. Okay, one, then you actually get 20. All right. And the thing also with your options contract. Okay, the thing also with your options contract, if you have one option contract, post split, you will get 20 option contract. 20, yeah. Okay. Okay. So the thing is the thing is this. When you entered into one contract, you actually pay commission for one. Okay. I mean, as far as the value of the trade, there is actually no change. Yeah, no change. The value of the trade, there's no change. Yeah, like the thing which we actually mentioned, one whole pizza is one whole pizza. If you cut into 8 pieces, it's also one whole pizza. Yes, there's no change in the not the size, the size. And then the only change is that you have 20 contracts right now. Yeah, like previously one piece uncut, then you cut it, you have 20 pieces. So when you have actually 20 pieces, right, the thing is that when you actually trade on these 20 pieces, which is 20 contracts, right, the broker charged you 20 times by the commission. Yeah. Okay. So the thing is that you actually get paid. You actually pay a lot more commission than you have actually entered before the trade. Okay. So the thing is, of course, if you have already, I mean, if you actually trade this, and of course, if the trade is already profitable, you can actually exit the trade earlier before the split, so that of course you can take the profit, confirm the profits taken, and of course the other one is also save on your commission. I mean, for 20, if you pay I don't know how much is the commission. I mean, I pay 65 cents per contract, right? So basically, that will also make up a bit of lunch money for you guys lah. So if you can save, and if you have made the money exit before split, and the other thing is, of course, the post split rally might also not be long. Like what happened in I think Amazon last 2 weeks, right? I think the post split rally only was actually 1 day, only. I think 1 or 2 days lah. Yeah. So after that, basically the also because of the market lah. After that, basically the whole thing actually spiraled down. Yeah. So again, exit early if you have actually made the profit. You don't need to actually wait until the split is done. Yeah. Also save commission. So this is what I actually wanted to share with you guys on the Google stock split, which we have also covered in our newsletter. Yep. You guys cool? Okay, let me see. All right. So what else? I mean, if you guys have any questions, whether related to trade, whether anything, just post. And if I catch it, then I will actually answer them. Yeah, answer them. Let me come back to here now. Okay, so these are the so-called stuff on trading. And earlier I mentioned that I actually wanted to cover what we have actually done for the past 1 year, right? Let me just put this up. Okay. So you guys see this, right? Okay, so this is our Facebook page. Okay, so for those people who have not done a review, okay, I would appreciate if you guys post a review on our site, right? Just take some minutes to actually post a review. Give us some feedback how you feel about our contents, and if you also want us to cover new things, you can always post it on our Facebook. Yeah. Okay. And I actually wanted to show you our videos, right? Okay. Series. Yeah. So this is the 50. This is the 52 shows. Out of the 52 weeks we were together. Of course, we only missed 1 week. Okay, we missed 1 week because that week I was actually going for a vacation. Yeah. Other than that, I am all yours every Tuesday for the past 52 weeks. Okay, for the past 52 weeks. Okay, we started the show. We started the show in. This was actually the first show, and this first show we actually had it on, I think, 16th of June. 16th of June, where I actually I was a bit shy back then. Then I had to actually invite a fellow trader to actually come on to the show with me. Yeah. And of course, this show, we started the show with a bit more introduction to trading, and basically to actually start off any trader's journey, or any person who actually want to trade. We actually explain. Um, um, we actually gave some tips like, yeah, that every successful options trader should know before starting this journey. And of course, our focus is actually really much on options trading, very much on options trading. But of course, along the way, you will also learn other things about technical analysis and all these kind of things. Yeah. So that was our first show. I started off with Lily, one of our fellow my trader friends, and of course the second show which we had. I was still a bit shy back then. I had to get one of my friends. One of my friends to actually join me on the show. Yeah, this handsome guy is Sean, and he willingly joined me on the as a guest in the show. And basically from that, we also showed the audience what is the best business model to actually have to do, what is the best business model. And of course, in this show, if you have not seen it, this is actually a quite fun show. And basically we talk about the business model, basically, which is a trading business model, a business model where you trade the market using options to actually generate income. And the core, of course, for this kind of business, you do not need to actually get customers every day. The stock market is there, and that basically was your customers. Yeah. So this is another fun show which we had. And of course, after the first two shows, I get acquainted to speaking live. And before this, I've not spoken before live before, not even on the stage to give public speaking. And these are all very how to say, very I am not comfortable. I'm not comfortable to actually do public speaking. And of course, for the past 52 weeks, if you see my first shows, it is quite uncomfortable. I have a lot of now also I have a lot of but of course, it become more natural after about 50 over weeks hosting this show. Yep. Okay. So what other things? Of course, along there are many shows. Then we started. The first shows which we actually started are more educational, to actually get you guys to actually sip in why trade the stock market, why actually become a trader or even invest. Yeah, and of course, the one of the main thing is, of course, the returns which we get out of trading or investing is actually much more than you keeping your money in the bank. Yeah, so this was actually the third show which we had, which we actually showed that trading and using certain type of strategies, you can actually generate more returns than keeping it in the bank and generating 2 to 3% a year. Yeah, so that was actually the third show which we had, and then we started to unveil more secrets about trading, and then we talk about opportunity costs for not invested in the markets, and then subsequently we actually talk about uh, you are able to actually use options, to synthesize stocks, just to give you a flavor that whatever you get out of trading stocks or investing in shares, you will be able to actually synthesize it using options. Yep. So this is again another introductory to give you a flavor why options. Yep. And of course, then again, the series continued educating, setting up a S&P home business. That means basically what we did in this show was to actually say that all the top businesses in S&P only makes about 10 to 15% returns a year. 10 to 15% return a year, and of course, you as a one-man show, how you can also emulate these S&P companies by generating 10 to 15% a year by investing or trading. Yeah. Yeah, and then of course, subsequent we educated you guys more to talk about why do options and because it's and why is it better than even investing in property. That means giving you another exposure to a different type of asset class where people do not understand, not as a trading instrument, where a lot of people do not understand, and they go for the traditional investment instrument like property. Okay, and how you can actually even emulate these returns from property investment and structure it out via options to actually get even better returns. Yeah, and of course, subsequent to that, this was the start, and of course, subsequent to that, I think the more advanced classes subsequent to this, we actually also started to speak about doing diagonals, another option strategy, right? Where you can actually lease to rent lah. Basically, you don't even need to own the property, or don't even need to own the shares, and you can actually lease the share, and from there, basically, you generate income monthly. Yep, that is a more advanced strategy where we actually taught later on in the Trader's Talk. Yep. And again, many shows from the start are really educating and putting you guys in perspective about trading, how to become a real life farmer, supercharge your income, and then again, we talk about how to actually increase your win probability, and then here we actually talk about being a credit trader. That means traders who actually accept premium, collect money from the stock market, from the options market, rather than buying options. We actually started a session here, the different type of traders in the options market, a buyer and a seller, and basically why a seller is actually much better. Then of course we expose you guys to trading platforms, and again, what is this? How to actually get stocks free by trading options. strategies, I mean testing strategies, back testing and all these kind of things, we move on. And then what is that? These are again another education. This is actually a challenge we did on to get you guys to trade together. And then what else? And then here we talk about some of the funds which you actually invest, some secrets you don't know behind. And then we came here actually end of the year last year, right? Santa Claus rally, how to actually capitalize on it. And then this we started to prepare yourself for the interest rate hikes, right? Interest rate hike, which was actually started all the way back in December last year. How to actually prepare yourself. And then here is what is that? Omicron. Yeah, this was another second wave or third wave or fourth wave. I forgot. There was another drop in the market because of this. These are more time sensitive information during that time. What has happened, and then of course, what else? Yeah, this was when a lot of things are not working, right? Not working. What should we do? And then okay. Okay, we're back. Okay, I forgot to on my battery just now. The battery, the laptop just died. And I mean things happen, right? I mean things happen. You cannot plan. You cannot plan for everything. Okay, so things happen, and now the battery was dead. Okay, so if I'm back, let me know. Give me a love or something so that I know that I am actually back. Let me go back to where we were here. Okay. All right. Everything good? Okay. So so sorry about that. Okay, good. We are back. We have lost some people. And that is actually pretty sad. Okay. So again, then of course, I think this was actually somewhere in this was actually somewhere in February, I think, somewhere in February, where we were actually first started to have the roller coaster markets to happen, and then the market crash. The market crash were crashing, starting to crash on that time, and then I think this was somewhere during Chinese New Year, where we're talking about whether there was actually hidden dragon behind the tiger. Yeah. And then of course at this time we spoke about chilling out from the market. That means to start to reduce trades and see if there are any good opportunities to invest. Yeah. And then after that, here this is again capital, doubling your capital, some education series again. And then here we are talking about the market signals, telltale signs, and that the market leaves clues, how we should actually use these clues to trade better or invest better in the market. And then I think in February, war came, hell broke loose. Yeah, all shot up to $120, and then all the shares were actually dropping during that time. What do we do? And then of course, subsequent to that, the China crash came also. China crash came in. Am I hang or what? No. This is the other. Okay, so yeah, okay, I'm good. So then, of course, again, rate hikes. We're talking about how to handle the rate hikes. What is there to expect? And then subsequent to that, we were talking about the trend. We during the March rate hike and to April, basically we were moving up and then coming back to the same time, and basically also shared some strategies how to actually capitalize on that using some form of neutral strategies. And then again, we reiterate again on repeating cycles, how to capitalize on the repeating market trend, market cycles where it is actually was trading in range, ups and down. Yeah. And here we actually took the opportunity to actually teach you guys more advanced strategies using diagonals. Yeah, because during that time, some of the shares were actually quite nicely valued. Then of course we wanted to share whether that is actually a good time to actually start to rent some shares to actually generate income. But of course that was also not a good time, because post that the market actually continued to go down. But of course right now, again, depending on what the price action, whether we have bottomed out or not, then again this show here would actually be very useful for you to actually start to actually go into this type of option structures to actually generate monthly or weekly income when the price actually start to go back up. But of course, even with this kind of strategy, we have to also understand a bit deeper. If the price move up too sharply, it will also not be beneficial for you guys if you actually enter into strategies like diagonal. Yeah, slowly going up is actually better for this type of trades. Yeah, rather than sharply going up. Then again, to actually counter for this type of price action that we want, then we actually need to see which type of shares has a past history of going up slowly when the market actually rebounds. Yeah, because some shares, they actually go up very sharply. Those are not the suitable strategies for actually using this. You will actually need to have shares that are actually slowly going up. Yeah, but of course, all this you can actually find in the market. Also with some tools which we have actually shown you. I think in this we show we have actually shown you some tools. Some tools here. Yeah, creating your own stock radar, finding the unknown. I think in some of the shows we have actually shown you the tools which you can actually use to do scanning or to actually look at the charts. Yeah, and I think in 2 shows we did it. I think this was one of it, and then there was actually another one where we talk about scanning it through Finviz, right? Finviz. Let me see which show was that. Getting ready, dash cost, reduce cost, break wall, hope not spotting. Are we done? I think in one of the shows somewhere here, somewhere here, we actually talk about using Finviz, just at a glance, using Finviz to actually see, look at the charts, to actually look at the charts patterns and all. So that is again, if you actually want to identify what kind of stocks have a sharp move up, or what kind of stocks have a gradual steep move up. This then of course, Finviz is actually a good, give you a good eye view of the charts on one glance. Then again, all these are timing things that actually happened. When I think this time was, we were talking about whether the market rally was actually a dead cat bounce. It was a dead cat bounce. And I think during that time also, I also cautioned the traders or the listeners, right, to actually say that of course, you need to actually look at certain patterns emerging before actually jumping in to think that the market is actually going to strongly bounce up. Patterns basically, we talked about few patterns. The W and the M patterns are very strong patterns in price action. In price action, W and M patterns, and of course these patterns always emerge in trades, even if you just master this price action, master it and see when you can actually use and when you can actually not use it. You will be a very good trader by itself. And then like I said here again, following on from the dead cat bounce, that we had the bull trap, right? Don't step on the bomb, right? Don't step on the bomb. In fact, I think after this, the market has actually went back down, touching back 3,800 again, back on this show. Just 2 weeks, just about 1 week, 2 weeks, then it came back to 3,800, and that's why you see this cube bear coming out again. Sometimes we really hate the bears. I mean, trader is still okay, but of course, if you are investing, then depending if you are invested or not invested. If you are invested, then you don't like the bears, so don't like the bears, because that will bring down the value of your shares. But of course, if you are an investor, if you have not invested, then you like the best, because you can always buy cheap stocks, right? So again, this show here, we were actually talking about the stock splits, stock splits for Amazon and then Google, how to actually capitalize on it. And this is my face. Okay, so I mean, this is what we did for the past 52 weeks with you guys on the show. And I think there are many people who have benefited from these shows also. And I hope that I've contributed a bit to the educating of the traders out there. And of course, I would want all of you guys to be educated. Whether, of course, the best is to be formally educated, by going for trainings and all. But of course, if you would actually want to learn anything, there is nothing to stop you. Nothing to stop you to learn anywhere. If you're open to reading books, watching traders talk like this and all, it is also fine. But as long as you're comfortable and you are confident enough, then of course that will do you a lot of good. But don't trade the markets if you do not know it. If you do not know it, don't trade it, because you will actually get into trouble and you do not know how to actually rectify it. So that is actually very dangerous. If you don't know it, don't do it. If you know it, then you practice it through the dummy platform or the test account and whatnot until you're comfortable. Then you can actually start to trade small. Trade small, and then if you start to trade normal, then you actually go on your risk management for each trade, risk management for each trade, 1 to 3% of your account size. Yeah. Then the other thing, the other tool which we actually gave out to you guys, right, was actually the newsletter, the newsletter which we had, and I think I started this newsletter way back in March 2020, in March 21, I think. In March 21, I've actually started to write this newsletter, and I think the first issue was actually I think I started in March. I think I started in March. I written it on a different platform. And then subsequently I actually moved it to host it on this review, which is platform by Twitter. And you can see that all the newsletter I written since March 21, I pump it into this platform almost every day, because I can only load one newsletter a day. So I think from there, 7, 8, 10, 11, 12. So I was actually loading newsletter which I've actually written since March, and subsequent to that, then it actually went on a weekly newsletter, okay. And yeah, weekly newsletter, and of course currently I open this up to everybody. Everybody can actually go and look at the what is that, the newsletter. You can actually go and look at the newsletter. Oh, I'm not showing you guys the newsletter. Let me see why. I'm talking and I'm not showing you the newsletter. Let me share the newsletter. Am I sharing the newsletter? Oh, I know why. Okay. I know why. Let me go back. Share with you the newsletter. Okay, yep. Okay. Okay, now you see the newsletter. All right. So I was actually talking on newsletter, but you guys don't see it. Okay, so this again. Okay, I go back, backtrack. Okay, so this was the newsletter. I said we started in March, right? So again now it's actually open up to everybody. You can actually just go to this page here, and you can actually subscribe to it. I mean, once you subscribe to it, you will be sent to your mailbox every week. Yeah, every week. Yeah, so these are all different topics, various topics. Of course, if you have time, you can actually go through each and every one of it. Most of the weeks you would have actually some form of training inside. Most of the weeks you have actually some form of training inside. And of course, if you have actually passed the old sections, right? Okay, maybe I just show you. Hey, I cannot go in. I cannot go in. I need to be a member. I'm not a member. Okay, let me just show you. Yeah, here. Okay. So yeah, so each section, of course, I start off by just talking some general stuff here. It may be some news or some relevant things. It might be something which I do over the weekend. It can be anything. Yeah. And of course, then I start to talk about the markets. You guys are also not seeing this. I I think I'm sharing. There's too many screens. Let me close. Let me close the screen. Which screen am I on? I'm on this screen. Let me see the phone. Which screen am I on? Let me reshare. Maybe. Stop. Share screen. Share screen. Share screen. Share screen. Window. Okay. Share. Okay, so I'm on this screen. Okay. Yep. Okay. So all right. So okay, we are on. Okay. So again, many repeats. Yeah. So again, I said I talked something up here, and then we talk about the markets. We talk about the markets. The past week market, and basically what do we expect in the following week. Only for S&P and Nasdaq, just these are the two key markets where most of the people would actually trade. And then here we have the bit on the education segment, the training section. Basically, this we were actually talking about trading in high volatility. What is that, and basically how can we actually what does it mean and what should we do and all these kind of things. And then of course we post in the past traders talk. If you have actually missed it, you can actually watch it here. And that's basically the gist of every week's newsletter, and we try to actually be as education as possible when we actually send this out. Okay. So that's about it. I mean, that was actually that's about it. That was actually what we did for the past year, and interesting journey for myself. I hope that you guys have also enjoyed it. Yeah. Okay, all right. So I mean, going forward, I mean, let me know what you guys want to, learn, what you guys want to know. Then from there, maybe the contents can be a bit more custom. Of course, for those who have actually seen this already for the past 1 year, you will actually want more advanced things. Okay, and of course, we also did cover a lot of advanced training in the past 1 or 2 months. Yeah, we covered things like the diagonals. We covered things like did we do butterfly? No, we did trades like financing of trades with put spreads with put spreads with naked puts. We did strategies like jade lizards. We did jade lizards, no risk on upside trades. I don't think we did broken wing butterfly. That's a bit more complicated. If you guys want to learn, of course, I can actually do a session with you guys. Or even if you want to have a small group session to over the weekend or something. If you guys can gather together a group of people, then by all means let me know. We can also arrange a session to do some trainings. It can be arranged. If you guys can get some people in. So that's all for this week, and of course again this week should be a relaxing week, green week, and I hope you guys would benefit. If the market goes up, positions can also be a bit greener for you guys, both trading and also investing. And all right, so I hope you guys have enjoyed this so far. Today session is just a bit nostalgic about what we have actually achieved for the past 1 year. So all the best this week, and I will see you next week. Don't forget to give a review on our Facebook page, and also tell more friends about the show. And I hope we can actually continue this for, I don't know, another month, year, depending on whether you guys want to see my face or not. Yeah. So I catch up with you, and happy trading. Bye bye.